Welcome to the Nephology podcast. I'm your host, Joe David, and I'm the founder and CEO of Nephos Group. On this podcast, we talk to founders, innovators, disruptors, and entrepreneurs from all across the globe who are building in Web3, technology, and finance. And if that's something that you're interested in, please hit that subscribe button to make sure you don't miss out on any of the latest episodes. Now on to the next episode. Hello everyone, welcome to the latest episode of the Nephology podcast. We're on the road today. We're in South Africa, in Johannesburg, and delighted to welcome Hank to the studio today. Hank, how are you?
Yeah, could be better, could be worse. Thanks for having me. It's
yeah, no worries.
Good pleasure to be here.
Thanks for coming along. So why don't we kick off with a bit about you and VALR and what you guys are doing, and so the audience know who you are and what you're doing.
I was afraid you were going to start like that. And I always wonder what I need to say. But,
easy start, surely.
Yeah,
telling people who you are and.
I mean, that's usually the most difficult question. But so my name's Hank Coetzee. I'm the Strategic Partnerships Manager at VALR, which essentially means I'm the wearer of many hats. I essentially look after both the supplier side and the client side on the kind of more intricate partnerships, and on the expansion front, it sees me looking after your retail bank partnerships, your asset managers, a lot of the remittance providers, a lot of the clients and suppliers that require like greater degree of hand-holding and that aren't using VALR products out of the box.
Yeah.
The enterprise use cases, a lot of B2B2C kind of stuff. That's essentially what I spend my time doing at VALR, frequently on the road for that, which I do enjoy. Business has turned into quite a large affair that's now quite far-reaching internationally. Really enjoying seeing it grow. About 8 years ago, before we started out, there was pretty much one predominant player in the South African market, which is now turned into two predominant players. I think from the VALR perspective, we're pretty much geriatric in crypto terms now. We've been around for about 8 years. We've grown to become the market leader in Southern Africa from a trade volume perspective as a central limit order book exchange. We now serve upwards of 1.7 million retail users. We also have a large corporate and institutional book, which is just under 2,000 corporates that we've onboarded for various different kinds of corporate and institutional use cases. We serve customers pretty much globally, although we've started out as a South African exchange by a bunch of ex-bankers that saw the light. I've been in crypto for nearly a decade now. Always had one foot in the alternative investment space. Tried everything. Started more businesses than I've worked in, many of which have failed. But I guess learned a lot. I remember starting out in the crypto world, which in South Africa at the time was essentially just a WhatsApp group with 10 or 20 people on, pontificating. And that was actually where I met the founders of VALR.
Okay.
And the kind of main engagement point at the time was being invited by some of the government agencies to go sit in a classroom at the research institute, drinking terrible government coffee, having discussions, trying to help educate the regulator on the space, and just really trying to figure out what this technology was all about. And that's kind of where the journey started. Ended up starting some crypto businesses of our own with some co-founders, and full circle, and now I'm at a centralized exchange. And then maybe just in summary, VALR at its core is a crypto exchange. We've specialized in the conversion of fiat currencies to crypto and the reverse. But it's now developed into a whole different beast, which is we primarily see ourselves as a financial infrastructure provider. And that infrastructure is driven by crypto, but it's far more than purely the exchange of currencies, and it's become an organization that's trying to kind of increase access in a fair and democratized way to finance. And a lot of our product development and business development exercises are with that in mind, to kind of create a means for people to gain access to an alternative financial system and making use of this new crypto and blockchain technology.
Yeah, and I feel like South Africa, but also the Africa region in general, is a prime market. Same with like kind of South America as well, Latin America, a kind of prime market for what crypto and blockchain was kind of like, in a way, kind of why it started was to give access to those that didn't have access to financial markets, to payment rails, all these different bits and pieces, right? And it feels like Africa as a region is a prime market. Coming from the UK, for example, the infrastructure there and the access to that infrastructure is pretty standard. Pretty much every walk of life in every way, shape or form has got access to digital banking infrastructure in some way, shape or form. It's not quite the same. Maybe in South Africa it's a bit better, but definitely in the wider Africa it's not. So I feel like crypto is a prime, or Africa is a prime market for crypto.
Yeah, 100% agree. I think South Africa and many nations in Africa have an extremely high degree of crypto penetration. South Africa, I think, is easily within the top 30, I would say.
Okay.
I think it's hard to know what the exact figure is, but somewhere between 10 and 20% of South Africans own crypto, and which is very high as well if you consider like the legacy banking infrastructure that we have in South Africa. I think in other African nations there's floodgates are busy opening because they don't have that legacy banking infrastructure. People are used to interacting with digital money. They're used to purely needing a smartphone to be able to enter the financial markets. But either way, there's inefficiencies in the system, particularly when it comes to cross-border remittances, and that's why you see like grassroots level of adoption of crypto on the African continent.
Is there a lot of because I'm from the UK, but I now live in Dubai, and there's a lot of external flow, if you like, where a lot of people will live in somewhere like Dubai and they'll be sending money back to family in kind of Pakistan or other kind of areas, Bangladesh, that sort of Philippines. So there's a big market for external remittance. Is there, obviously, there are kind of things like exchange controls here, but is there an element of external remittance, or is the majority of it internal remittances, if that makes sense?
The remittance markets are huge, and there's in South Africa particularly because there's a lot of migrant workers here. Things like this. I think stable coins have really added a massive infrastructure layer for these kinds of things to take place. We also work directly with a lot of these remittance providers, where we face them and they face their end clients. So VALR, as I said, is an infrastructure provider, and we're able to provide them with this kind of thing. A big player in the space, I think one of the largest in Africa that we work with is Mukuru. For the time being, it's not a remittance product that we power for them, but we have given them a means to have their customers buy and hold a US dollar stablecoin. Which is great if you want to kind of avoid currency risk, general inflation. So that's a big way of how we work B2B2C.
That makes sense.
And this is extended to many remittance providers in and around Africa that we work with as clients and suppliers.
And is there a big market for you? I mean, you just mentioned US dollar denominated currency, whether that's a kind of crypto in a sense of a stable coin, or whether that's a kind of fiat currency. Like, is there a big market for businesses, especially here, to hold, in inverted commas, a more stable currency like the dollar versus the rand? Or because even in my short time of doing business here, I've seen some fairly large fluctuations in the value of rand versus USD or GBP or what have you. Is there a lot of businesses now here that want to hold that because maybe they're doing international business or whatever, and they want to hold that, or people still denominated quite a lot in rand here?
Yeah, it's a good question. I think so. Firstly, yes, there's a lot of demand for that, particularly when it comes to treasury use cases, particularly when it comes to yield-bearing dollar-denominated assets, which crypto is very good at providing. So, and even more so in other regions in Africa, right? Like people don't necessarily want to hold the naira or the shilling or the Egyptian pound or the whatever the case is, right? The cedis don't want to hold that because it's just too volatile, and there's a lack of liquidity in these local currencies. So we're seeing enormous demand for dollar-based stable coins throughout Africa. There's some demand, interestingly, as well, for the euro stable coin, where VALR is one of the only, I think, liquid exchanges for EuroC as a euro currency. I think probably because of the remittances happening between Europe and Francophone Africa. But yeah, so we see a lot of treasury use cases. And then layered on top of that is kind of the ability to earn yield in those assets. And often, I'll just use a VALR product as an example. We give people the means to gain access to a dollar-denominated yield through a tokenized private credit strategy, which is a North American strategy, but the structure is such that you don't actually need to offshore the capital using your exchange allowances to actually gain access to a super high quality dollar yield.
It's an internal kind of product in inverted commas. So that's really useful for a lot of people, like you say, that can't offshore or have a limit of what they can offshore and how they manage that, and so it's giving access to, obviously that's specific, I guess, around South Africa, but giving access to the African market to, like you say, these high quality products that in other areas they wouldn't be able to get because they can't offshore their money to be able to buy it.
Yeah, and I mean that's not the only constraint that is alleviated through the crypto rails, right? That's just the exchange control example, but on top of that you've got the access that crypto provides. So I would never be able to get access to a dollar private credit strategy giving me that kind of dollar yield without, let's say, $100,000 or $200,000 minimum, and with a high degree of liquidity. So instead of like waiting, whatever it may be, 1 to 3 months to actually have liquidity over your funds, we can do this on the spot. We can,
and with very low minimum entry.
And that's a use case that crypto tech lends itself to very, very well.
100%. 100%. And you touched briefly earlier, on talking to the regulators, and how are the regulators in South Africa seeing crypto in general? What I mean by that is, obviously you're a regulated exchange. Is it a friendly kind of jurisdiction for regulated, activities, or is it still something that's in its infancy from a regulatory perspective?
Yeah, it's a good question. The answer is yes and no. I think on the positive side, the South African regulators have gone to great lengths to try and create clarity early without over-regulating, like what you've seen in markets like Europe, for instance.
I was going to say, Europe.
Europe, I think, had an opportunity now in this technology to not over-regulate, which has been, its MO for a while. Whereas South Africa was pretty early in terms of creating this CASP, or Crypto Asset Service Provider framework, that at least gave us some semblance of clarity as to how we can operate. But that's purely just on the licensing front, which, as we said, VALR is fully licensed here as a financial services provider, as well as various other things like derivatives licensing and payments licensing, things like this. However, there are still a few outstanding questions, and there are currently a number of court cases and engagements between government agencies to determine how they're going to solve the rest of the things in front of them, and kind of come up with answers to those questions.
But the concept of a regulated exchange or a regulated service provider within crypto is fairly well established in terms of the framework for that.
Yes, I would say so.
Which is good from a kind of what's the word, like a there's a lot of jurisdictions. The UK is a good example of that, where there is no real framework at the moment. There is a kind of sandbox, regulatory sandbox at the moment, where businesses are going through that. But at the moment, given how far along the crypto blockchain journey we are now, for the UK as a jurisdiction to have no real framework for it is not great, in my opinion, compared to something like even the US. Until Trump came along and started changing the rules a little bit. Like, even the US was very, so I think it's a very positive thing from a South African perspective that they came out quite early and had, a framework at least for people. Because the problem is, I guess, especially here as well, as, the more you don't regulate something, the more you open it up to the black market, and then you open it up to risk for users and consumers, and they're the ones that end up losing if you don't come out ahead of it. Do you know what I mean? And build something.
So I partially agree. The area in which I disagree is what is more dangerous than a lack of regulation is bad quality regulation.
Yeah, fair.
And we've seen examples of this in the likes of India, for instance, where the tax burden on an exchange, and not only the tax burden because of cost, but the tax burden because of operational inefficiencies, basically killed the crypto industry in India. So that in turn pushes all of that activity underground.
Yeah, that's true.
And
that's true.
Yeah, and that creates a lot of danger, both physical danger and let's say fiscal danger.
Yeah. No, that's very true. Actually, you're right. There's a very big balance in the middle of, you don't regulate anything, you have a risk.
Yeah.
You over-regulate, you drive things underground anyway because you've over-regulated. So that that makes a lot of sense. And also, I guess, enforcement as well. If you're going to put, the UAE, for example, there's a heavy enforcement activity in the UAE on unregulated exchanges. Even KuCoin and Mexi, two large exchanges last week. The UAE came out and said they are operating here illegally, effectively. They must stop operations. Anyone that is using them should stop because there's too much risk, and blah blah blah. So I think you've got to be able to enforce those regulations as well, because if you don't enforce them, then nobody respects them and they just do what they want anyway, and then you're regulating for the sake of regulating and no one's actually getting anywhere. It was also a kind of interesting one, because 4 or 5 years ago I was like on the camp of crypto's supposed to be deregulated. It's supposed to be an area where it's outside of the usual kind of regulatory framework and gives opportunity. But then the flip side to that is, especially when you're a centralized exchange and you're dealing with day-to-day retail customers, there needs to be protections of them. That you can't have a completely unregulated market. It's a very difficult balance, I think.
Yes, I agree. It's a difficult question, and it will always remain a difficult question. I think from my perspective, the main thing is just let's not apply archaic regulation to something that is so new and so completely different from anything that's come before it, from a technological and economic standpoint. That's the one thing. And then the other is, if we're going to attempt to do this, then provide clarity.
Yeah.
So the regulation has been helpful in South Africa in that the licensing framework's been helpful in that it's allowed us to engage with enterprises that would not otherwise have been willing to venture that step.
Yeah.
That being said, I really don't think that regulation is a silver bullet. You still have the Enrons, the Madoffs, in South Africa, the Steinoffs, that still occur, right? So,
and which is interesting, because that's another big thing that I have the conversation about, where people say, take FTX in the US, for example.
Exactly.
and people say, oh, this and that, but then you look at an Enron, you look at a Bernie Madoff, as like you say, starting off here, like it doesn't matter how regulated you are. There's always going to be bad people that want to do bad things or that end up doing bad things, and that's not a crypto problem. That's not a traditional finance problem. That's a human problem.
Yes.
That there are bad humans doing bad things, no matter how much regulation you put in place.
Yes.
So I totally agree, and there's definitely, that's what I said, there's definitely a balance of protecting consumers versus over-regulating a very fast-moving, technologically advanced product. And that is, don't get me wrong, that is a challenge for regulators to,
for sure,
to be able to manage. Just I guess on the touching on regulation, but then does it help from an off-ramping perspective to have that licensing regime? Because in the UK the banks are so anti-crypto because there's no real framework, and it's very, very difficult to look at an exchange and say they're a hugely upstanding, legitimate player in the market. So the banks have just like, look, we can't trust anyone, so therefore we deal with no one. Here it's felt like, in the limited amount of off-ramping I've done, it's felt much more seamless to off-ramp my crypto into a bank account out here. Do you find that the banks are much more understanding or on board with the space here?
Yes, I think it's partly a technological question, it's partly a regulatory question, but I think for now, rather than go down a rabbit hole, I'll just say that some of the banks have been super supportive with us. I think it helps that we're a long-standing exchange. We've got long-standing relationships, and they've understood that there's a massive degree of significant legitimate business to be done here.
Yeah,
we've spent a lot of time and effort building best-in-class banking integrations. We're always actively chasing additional technological advances on and off ramping. We've got the payments licensing to support it here for in terms of TPP licensing, third-party payments processing licensing. So it's been a helpful environment to operate in.
Yeah, I mean, like I say, it's more from experience of other jurisdictions and the challenges that come with those jurisdictions. It's felt, like I say, in my limited experience, that it's more positive experience with
I would agree with that.
Than in others. So a big part of your business, I guess, is the kind of institutional side, and I guess part of your role as well is that institutional side as opposed to the retail side. What's the institutional kind of take up and kind of market consideration here from a business perspective? Is there a big market for the business side of things? And
yeah, absolutely, and it's moving at a rate of knots. I would say VALR is the market leader in terms of servicing institutional use cases. We've spent years and millions on developing API first capabilities to power enterprise use cases, as well as your enterprise grade admin and management tools like sub-accounting technologies and shared accounts access and very granular API key management on a sub-accounting level and all this kind of thing. So I would say we see most of that corporate and institutional flow, and we're seeing every man and his dog get involved from a corporate and institutional perspective. I mean, we are dealing with several of the retail banks that we're working with to help power crypto infrastructure on the back end. Many of these are kind of coming to fruition now. So the hope is that very soon you will have the man on the street have crypto spot market access from within his banking environment.
Right. Okay.
So that's a massive distribution channel that I think will
huge. Yeah.
Not only us competing for a piece of the pie of crypto users, that is increasing the size of the pie. So there's the retail banking side. There's a lot of the larger asset managers that have predominantly been in your traditional asset classes, mostly equities, bonds and things like that are looking for spot market access. They're also looking for things like bundle products.
Yeah.
So we've launched bundles on VALR.
Where they want a basket of different.
They want a basket of crypto assets,
Yeah.
or they want a basket of crypto and traditional assets.
Okay.
So blending arriving at a blended return over time of, let's say, Bitcoin and gold.
Okay.
Or Bitcoin and stocks. I mean,
Yeah.
so we've also got X stocks on the platform, which also gives US equities exposure in an onshore vehicle. All of these things lend them well to institutional use cases. There's the big remittance providers, like I mentioned as well, and the demand is huge. We see all these larger institutions, and then we see purely just e-commerce sites wanting to accept crypto. We see normal domestic wallets that want to power quicker payments, that want yield on the back end. But I think that generally speaking, there's a big UX upgrade in progress for crypto. And I think where we'll end up is that the concept of crypto will mostly be obfuscated from the end user.
Yeah, okay. They won't realize that they're dealing with the kind of crypto back end, if you like.
Yes.
Because the front end is the normal flow they would see normally.
Yes. And it's objectively, the tech is objectively better in terms of visibility and risk management, speed, cost, programmability, all those sorts of things. So, I mean, even the likes of structured products on chain makes a lot of sense, right?
Yeah, I mean, tokenization for me is a huge, it's a buzzword, but it's a huge opportunity. I think from a financial, I think from a non-financial perspective as well. Personally, I think there's a huge opportunity to tokenize a lot of things, loyalty, ticketing, a lot of this sort of stuff. I think is huge, and I think that is a huge market, as well as then the financial side of, like you say, tokenizing structured products and stocks and getting access to these things. But I think at the moment it's still again in the UAE we've got a lot of talk of tokenization of property. That's great, but there's got to be liquidity. There's got to be a marketplace. There's got to be the ability to flip that. Otherwise, you're just buying a share of something in the same way you would anyway if there's no liquidity to flip it. So I think we can all create the front end. We can all create the product for it, the wrapper, whatever you want to call it. But it's then building the back end of that, which is the liquidity, the marketplace, etc., that actually is driving the flow of that product. Otherwise, it becomes it's probably slightly different for you with the, you mentioned the onshore access of offshore assets, if you like, in terms of stocks and things. So there's probably a huge product there that doesn't require the liquidity in inverted commas. No one's trying to flip that, if that makes sense. They're trying to access something that they wouldn't be able to access otherwise. Whereas on my side, I'm talking on the, I buy a proportion of a property or real estate asset. I want to be able to. The whole point of buying a tokenized version of that is that there's a liquid
get access to a secondary market.
Exactly. Yeah. So I think there's two sides of it, but tokenization is huge. I guess touching on South Africa as a market more generally. I mentioned to you, even at my hotel this morning, one of the waiters saw my T-shirt and was like, "Oh, crypto, you're into crypto," and I was like, "You into crypto?" He's like, "Yeah, I've been into crypto for a long time." Is there a lot of on the ground retail? Like, what's the retail market like here? Is there a lot of it? Do you think?
Yeah, I think there's a lot of speculative appetite. South Africa is not a huge market in terms of a demographic that has a lot of free disposable income to speculate on any asset class, never mind crypto. But anyone who is and who's in a position to do that, I think has at least looked at crypto, if not actively holds crypto. So there's definitely the speculative side, and then there's different market segments that have that are making use of the more practical applications, like the stablecoin side of things, and the tokenized plays. But crypto is very much, I think, at the forefront of mind of many South Africans. That said, I think we're quite a skeptical, maybe not skeptical, but conservative nation generally. I think, having said that, a lot of the news that's been coming out in terms of the pedigree of the financial institutions that are getting involved globally. I mean, never mind just financial institutions, but like nations holding crypto on balance sheet. Is helping to change that. There's still a lot of misconceptions and things like that, but personally, a lot of people don't like this fact. But personally, I think the speculative nature, in terms of it growing the overall interest level, is a good thing.
Yeah, it's difficult, isn't it? Because I agree with you. What drives a lot of retail activity is that speculative nature. That being honest, that's how I got into it in the first place. Of course. I saw an opportunity to make money faster than making it in another market, potentially also lose it faster. But
especially that one.
Yeah, which does happen a lot. For me, I think that was a huge reason why I initially started reading into crypto and looking into crypto was this market that moved so quickly, but that also carries heavy risk,
of course,
as well. So, and you mentioned obviously governments looking at the kind of country's balance sheet, if you like, and the US made a big deal in Trump's election campaign around a strategic reserve and things like that, which I don't know how much of that's come quite to fruition, yet. But has there been any talk in South Africa of anything like that from the government here around a kind of strategic reserve in crypto?
There has, but I think it's become more of a global meme than than an actual discussion where we've had someone in government ask why not a strategic beef or mutton reserve, which was quite comical. But look, I think there is deliberation happening across all governmental level as to whether or not there's a solid understanding of the economic potential. I think there's a lot of education still to be done, as is with the general populace.
But are they open to that? Like, are they talk, because you're also a big player in the market, are they talking to people like you to say, look, we do genuinely want to understand this?
Yes and no. Some departments more than others. I think it'll take time. I don't see us. I have hope, but I don't see us being early in terms of the national adoption and execution of something like a strategic reserve. That said, we see a lot of corporates doing things with their treasury. Investing heavily in Bitcoin with the company treasury,
which in a way it's not directly a national strategic reserve, but if you have some of the larger corporate entities of the country that drive a lot of the economic value in the country holding crypto, Bitcoin, whatever it may be, by default, you are kind of, like, say, indirectly then becoming a country that has an element of...
That has a high degree of strategic crypto reserve.
Because of the nature of the economic value that those companies drive. So, that makes a lot of sense. But, even the UK, I was reading a few weeks ago that the UK seized, I can't remember the number, but it was a significant number in kind of illicit activity and Bitcoin. And the huge thing was that they were just going to sell every penny that they had. And there's one thing buying Bitcoin for the country's strategic reserve. That's a big step.
Yeah.
But there's a second step of that, which is not selling what you have, if that makes sense. Which I think is, in inverted commas, an easier sell, right? Because you're like, well, look, we've already got it. That's a good starting point. Whereas going out and spending taxpayer money on this volatile asset, I can understand being a more challenge. But even places like the UK that you would argue is quite, especially in the fintech world and things like that, you'd argue it's very forward thinking, is still very far behind in the even thought of consideration of of a strategic reserve. Maybe a change in government in the UK would change that. But again, I don't think there's a huge clamour. I think in the US there was quite a big kind of clamour from people to go, we want the country to have this strategic. In the UK, I don't think we have that. I don't think there's a huge amount of the normal population that say we are pushing for a strategic Bitcoin reserve.
Why do you think that is?
I think it's lack of understanding, first of all. I think the UK is, as much as they're very forward thinking, like I said, a lot of financial products and markets, they're very far behind when it comes to crypto opportunities, I think, and understanding. Like, even, I mean, my dad's obviously an older person, but like, he's got no idea. Like, he knows because of me, but he doesn't know, and so there's a lot of people that really don't, you don't walk down the street and hear crypto conversations very often. Whereas in the UAE, for example, it's a constant, it's a constant conversation. Part of the reason why I moved there, but so I guess that's part of it, is the lack of understanding and the lack of kind of activity within it, and therefore people aren't asking for it. It's an interesting dynamic, and I say that because it's easy for us to sit here and say South Africa this, South Africa that, but actually then if you take the UK as an example, a UK is what a lot of people on the outside looking in would say is a very forward thinking jurisdiction, with a lot of disposable income and all those sorts of things, but even there it's and a lot of that comes down to regulation. There's no clear direction of path at the moment, so therefore it makes it very difficult. There's a couple of entities I know that have got fairly decent sized strategic Bitcoin reserves on their balance sheet, but nothing in comparison to what you would
in the state.
So it's a very interesting but again, there's actually a football club in they're called Real Bedford, and they're a small town called Bedford in the UK, not far from London, and they the guy that took it over, Bitcoin guy, had a Bitcoin podcast, and they've got huge sponsors now. They've got Gemini, Ledger, these huge kind of big names, because they've gone all in, if you like, on being the Bitcoin club, and so they've managed to write. They were a low ranked football team in the pyramid in the UK, and they've managed to raise a lot. So I think there is if you do it right, I think there is an opportunity for it, and there's a marketing play for it, but it's got to be done right, and it's got to have the real belief from the leaders rather than anything else.
Yeah, I hear you. I mean, I think it's still very early, right?
Yeah. I think we forget that as well.
Yeah, I mean, the whole asset class is whatever it is, 17, 15, 16 years old, which is crazy if you think about it. And up until our recent wobble in asset prices was only a $3.5-4 trillion asset class, which is tiny in the global scheme of things. That said, I think it's also important to say that like we're way past POC and MVP, right? Like way past that.
I guess the issue at the moment though as well for a lot of the big players, I think, is it doesn't take much to move the market. And if you're a JP Morgan or someone like that, and you're thinking of getting into or even an Investec or someone like that, and you're thinking of doing, it's very much at the moment it's too illiquid, I guess. The market can move far too quickly on such little volume. For a bank or a institution of that size to really start.
Yeah, I understand, but I mean, like, there are a lot of risk assets around the world, right?
Yeah.
And I think so. Fully agree, by the way. But I think there are a lot of risk assets around the world, and there are allocations to these assets by the largest institutions as well, in whatever ratio that makes sense to them within that product. And I think crypto does have a place in that. And then the other thing is just, I think it's a little early. However, there are small signs of certain crypto, Bitcoin specifically, becoming part of a portfolio as not just a risk asset. For example, I mean, we've got basically World War III kicking off at
Yeah,
the moment.
I mean, I've just come from it. So.
Well, I would love to talk to you about that after this. But we have that, and yet, despite all the uncertainty that's currently happening there, we've seen crypto
pretty flat.
And recover. I think done maybe somewhere between 6 and 8% in the last week.
Yeah.
Whereas the American markets have done -2.
Yeah.
Yes, I think it was pretty much from a crypto perspective oversold. So there's definitely that too.
I also think an element of this was priced in.
Agreed. But nonetheless, you would think that an asset class that was traditionally viewed as a risk asset.
Yeah, 100%.
You would think that we'd be, falling off a cliff.
100%. And I was there at the forefront of it on the Saturday when it kind of really kicked off 10 days ago, or whatever. And I expected to see a huge sell-off in the crypto market.
Yeah, me too.
Yeah, a huge sell-off. 20-25%.
Yeah, despite the sell-off after October last year.
Yeah, exactly. I expected a huge sell-off, and to not get that, I agree with you. I think there's a few things. I think some of it was priced in. I think two, we were oversold already, so therefore there wasn't so far to go. But I was still expecting a lot of these leverage positions to be pulled back and to see a huge downturn, and the fact that we didn't, I think, like you say, is a positive. Is a positive thing for the market. And when I said what I said around the banks and stuff, it's not me. I don't agree with that position as such. I just, it's what I can see from outside looking in, as I can understand it from their perspective.
Yes, I agree.
That they're making so much money hand over fist doing all these other bits and pieces. Why take a risk on this? This thing, right? Whereas the likes of you and us as well, there's an opportunity to high risk, high reward, right? We get this right. It's especially for you guys here in South Africa, it's a huge market opportunity. You get it right, you become number one. Well, you are number one. The world's your oyster. So I think the opportunity. Whereas if you're JP Morgan or Investec, you don't necessarily need to take those risks to become number one because you already are.
Yeah, and it's kind of value destructive to your current business. To the way your business is currently.
Exactly.
Yeah.
But we are seeing family offices and high level investors, especially with the new generation coming through in a lot of these family offices. It seems a bit of a generational shift at the moment in terms of family office and high net worth, where there's a lot of movement of wealth between generations, and the younger generations are saying, well, look, we want to be part of this game. The older generation, I've got one at the moment, a good friend of mine, they actually own some assets in South Africa, and father, very old school, very we do a deal over a handshake and a glass of wine. We don't do a deal on a legal contract type thing, and versus the younger generation being, obviously there's a lot more kind of contractual stuff, but also wanting to invest in more interesting and so I think there's a generational wealth shift as well, which is changing the market. But if you're the CEO of a bank that's been there for 50 years, why take the risk? And I get that,
for sure.
So I also said it about, in our market from kind of accounting and things like that, why would Deloitte could click their fingers and be bigger than us in crypto, but they're not. And why is that? Because the partners don't want to take the risk. Why would they? Whereas for me as a younger kind of up and coming business, the only way for us to break through that barrier is to do something different. So I think that's I see a big difference in how the market shifts.
Yeah, I completely agree. And look, there's still a lot of opportunity, right? Just because a lot of the stuff is commoditized, there's still a lot of opportunity, and particularly if you can find yourself working in jurisdictions that are friendly. The last thing you want is to go down a rabbit hole with a regulator, and there are many examples of this. Go down a rabbit hole with a regulator who seems to want to play and make a friendly environment, and then just never fully executes on the promise.
No, I agree. There's a lot of that, and I guess just kind of coming to a close, it would be good. Like, where do you see, from your perspective? I guess the South African market is probably more in your wheelhouse, as it were, but maybe as much as you can talk globally as well. Where do you see crypto kind of moving here and wider maybe the wider Africa market as well.
Yeah, I think most of the comments I have surrounding that are pretty sort of globally relevant. But as far as South Africa and Africa goes, I think probably the largest thing we'll see happening here is in relation to payments.
Okay.
It's just such a vastly improved experience, both for a retail user and a corporate user to move funds around using stablecoin rails. And I truly believe that it's a bit of an ambitious timeline, but I truly believe that in 10 years, there's really no reason why any significant economic activity should be occurring on Swift.
Yeah.
It's just an archaic, slow.
The only reason, sorry to jump in, the only reason that it will still be the case is because of the control that organization, if you want to call it that, has over the global market, and the ability that they will have to slow any transition.
Yeah, for sure. I mean, it's sort of a bit. I don't know if the term blue sky thinking is
I mean,
correct,
logically, I think you're 100% correct. Logically, I don't think 10 years is too long at all. I think it's, in fact, I would say it could happen significantly faster than that. Reality, with incumbents might mean that it's ambitious from that perspective.
Yes, completely agree. But nonetheless, whether Swift is replaced or not in 10 years, I think the payment side of things, but specifically cross-border, but domestically too. I mean, you wait 2 days for a transfer from one bank to another in South Africa. I think that is where we'll see the biggest impact in Africa by far. And as a precursor to that, and by extension, you will see accounts, if you will, that are provided to individuals that don't have a means of getting another bank account. So and on top of that, you've got a huge amount of products that you can then provide. I mean, you can do interest-bearing accounts for the unbanked, right? Using a digital wallet. You can then add all of the other interesting things on top of that. So I think Africa-wise, it's this notion of a crypto account that functions similarly or better than their normal bank account, and then the stablecoin payment rails on top of that. Globally, I think what's going to be very, very interesting is we're going to see a lot more. We're going to also see the removal of borders from a financial perspective and market access that comes along with that. But I think that we're ultimately going to see two main things. One, issuance of assets on-chain natively, as opposed to a tokenized representation of
agreed,
another asset, whether it be equities or bonds or gold, whatever the case is. We're gonna see issuance on-chain. Is the one big thing, and then the other. I haven't lost my train of thought here. Is a parallel and vastly improved FX market. Which is just going to solve a lot of liquidity issues and things across the board. And then thirdly, I think, obviously a bit of a buzzword at the moment, but agentic payments. It'd be great if I could, every time I need, I don't know, let's use a silly example. Every time I'm running low on milk or vitamins or whatever the case is, this just happens automatically.
The agent can do the whole flow for you.
You can do the whole flow for me. And
I think also like travel. Travel is a good example.
Travel is a good example.
I think of I need to go to Cape Town on Friday, and find me the best. I want to go between these times. Find it. This is your limit. Go ahead and book it. And I think that's a very easy kind of product, if you like, to start with.
Even payroll stuff, right? Payroll or supply chain related things, pay to play things. I think that's going to become a huge part of our future. And just having said that, I think the biggest changes are going to be in the things that we haven't thought of yet, which are going to be kind of bolstered by the AI revolution, if you will. So that's very exciting for me, right? That's
same.
Something that crypto and blockchain lends itself to very well.
Yeah, I did a talk last year in Dubai around AI and crypto and blockchain being a match made in heaven.
Yeah.
When you think of a executable smart contract being able to be delivered by AI autonomous agents, I think is because it is so programmable in terms of, that's not the right word, but like in terms of the smart contract can be so explicit in what it can do and what it needs to do. It is so easy in a way. I say easy, that's the wrong phrase, but to see that flow of AI smart contracts delivery of
Well, I mean, like if you think of it in a practical level now, I don't know where this thought popped up, but I mean, I could say, look, this is an agent that makes sure that my fuel spend is optimized, right? And it's like, okay, look, people are bombing one another in one of the largest production centers in the world, and this thing would have just autonomously bought fuel and delivered it to my house before I'm paying through the nose for fuel.
Yeah.
I mean, like use cases like this, right?
Yeah, 100%. And I think we didn't touch on AI much on this conversation.
Yeah, that's a rabbit hole.
Yeah. But I agree, it's a huge opportunity. So, look, again, as always, I could sit here and have these conversations for a long time. But just like for the listeners, like where they can find you guys, and we'll obviously link stuff in the description. But where they can find you guys if they want to learn more about you guys.
Yeah, amazing. You can find us at VALR.com. The team is always available. We have pretty good processes in place for the right kind of mails to get to the right people within the organization. I'm very active on LinkedIn as well. If people want to chat, there's various use cases we can help them build out, and always happy to assist. We really do take customer support and hand-holding very, very seriously. We've got an amazing team that is on the ball around the clock. So best is Twitter, LinkedIn, or our website. But I think in South Africa, people will generally catch me at all the crypto events. I'm generally
the face.
Well, I've got a face for radio, but I do have biceps, and I'm usually wearing a VALR t-shirt, so that generally
stand out.
That generally helps.
Well, look, Hank, so good to have this conversation, and look forward to continuing it at some point. But thanks for your time today.
Yeah, amazing. It's been a great pleasure to be here. Thanks for having me.
No worries. Thank you.
Awesome.